I asked AI to rank the Magnificent 7 stocks across the following 5 categories. Moat, strengths and durability of the company's competitive advantage. Risks, business model vulnerabilities, regulatory exposure and operational uncertainties. Lower risk equal to better rank. Optionality, the company's ability to create or expand into new markets. Valuation, relative to fundamentals and market expectations. Future returns, expected long-term return potential. For each category, assign ranks from 1 best to 7 worst. After evaluating all 5 dimensions, provide a summary table that consolidates the rankings and presents an overall ranking based on cumulative scores. Please provide brief justification of each ranking. In this video, I will share with you the rankings from AI for Magnificent 7 stocks in terms of the moat, risks, optionality, valuation, returns, and also the summary score. Along the way, I will give you my own commentary. Which points do I agree? There was definitely some disagreement, especially in the categories of valuation and returns. What's going on, investors? Hopefully, guys are doing well out there. Let's immediately start with the rankings. Category number 1, moat, evaluates the strengths and durability of each company's competitive advantage. The rank 7 of 7. Tesla, innovator in electric vehicles and energy solutions, but in a highly competitive and capital-intense industry. This is true, the CapEx for Tesla was absolutely exploding in the recent years, even though the production was flattening. I also agree that auto industry is very competitive. We can see this from the market share of Tesla. In the recent quarters, the market share was flattening or declining for Tesla, especially from Chinese rivals. Number 6. NVIDIA, leading provider of GPUs essential for AI and gaming, but reliant on cyclical semiconductor markets. This is one of the biggest problems for me why I do not put significant amount of my capital in NVIDIA, because I'm a bit worried about cyclicality of the semiconductor industry. When the economy is expanding, everything is good and semiconductor stock outperforming the market. But during the time when economy is contracting, the semiconductor stock will underperform significantly the market. That's why NVIDIA has to transform their business from hardware to software and recurring revenue streams. Company number 5, Meta. Large user base across platforms, but facing challenges in user engagement and regulatory scrutiny. I actually don't agree with AI's point about the user engagement. Here we can see from the Meta's report, family daily active people keeps growing even though it's already reaching 3.4 billion people, which is half of the world's population, but this number continues to grow. Company number 4, Amazon, e-commerce and cloud computing giant, though facing increasing competition in both areas. Currently, Amazon is holding 30% market share in the cloud market. Meanwhile, Microsoft Azure is rapidly catching up with 21% market share and Google Cloud with 12% market share. This market is very competitive, but I believe that Andy Jassy, who previously was the CEO of AWS, will be able to find a way to keep growing AWS business, which is one of the most important parts in Amazon. And now we are coming to top 3 players in terms of the moat. The place number 3. Alphabet, leader in search and online advertising, with a diverse portfolio including YouTube and Android. I agree here, but I am amazed AI did not mention about the competition from LLMs and chatbots for Google search, as it is taking north of 50% of Google's revenue. Currently we are coming to top 2 in terms of the moat. The second one, Apple, strong brand loyalty and ecosystem integration, particularly in hardware and services. I am absolutely Apple's fanboy. I have iPhone, I have iPad, Mac Mini, MacBook, AirPods. I love using Apple's product. I think this brand is one of the strongest brands in the world. And now top 1 place in terms of the moat. Microsoft, dominant in enterprise software and cloud services, with a broad ecosystem and high switching costs. Microsoft is absolutely beast of a business with a high diversification, more personal computing taking 36% of the revenue, productivity and business process is taking 33% and intelligent cloud is taking 31%. Microsoft has a lot of products people cannot imagine enterprise life without. Here we go. Currently we have rankings for the moat. We will go through risks, optionality, valuation and returns, and finally we'll see the summary. Stick until the end to see the final result. Risks. Assesses business model vulnerabilities, regulatory exposure, and operational uncertainties. Lower risk equal to a better rank. Company number 7. Tesla. High capital expenditures and competition in EV market increase operational risks. We already go through the capex and competition for Tesla, which is a large problem for the company recently. Company number 6. NVIDIA. exposure to the cyclical demand and geopolitical tensions affecting semiconductor supply chains. This is true. Recently, administration put another limitations for Nvidia to sell high-performance GPU in country of China. So geopolitical tensions is definitely slowing down the business of Nvidia. The company number 5, Amazon, thin profit margins in retail and regulatory challenges in multiple markets. This was my bull case for Amazon for a long time. I believe that robotics and efficiency optimizations will improve the margins for the retail. And finally, this company will become much more profitable. The company number 4, Meta, significant regulatory scrutiny and dependence on advertising revenue. Absolutely true. Currently, Meta is generating $41.4 billion in a quarter from advertising, meanwhile $500 million from other segment. So mostly Meta is advertising company. And coming to top 3 company in the list, let's see, the company number 3, Alphabet. Regulatory pressures exist, but diversified services provide resilience. I would argue with this. Currently, Alphabet's search business is taking north of 50% of total revenue, and recently from Apple executive we heard that the search volumes in Safari decreased in April 2025 for the first time. This is the first proof we saw from the confirmed source that search is actually declining. Meanwhile, the use of AI is increasing and rapidly taking the market share. So I believe that top 3 for Alphabet is actually not the best rank. I would say that Amazon actually deserves more top 3 place than Alphabet. But let's move on. The company number 2, Apple, robust balance sheet and loyal customer base, though dependent on hardware sales. The balance sheet is very healthy for Apple and the buybacks is absolutely ridiculous. That's why the price is actually not going down, because they are buying back $100 billion in a year in shares. This is mind-blowing buyback. And now we are coming to the company number 1. Ready? Company number 1 is Microsoft. Diversified revenue streams and strong financials mitigate risks. I agree with that. Microsoft has growth, Microsoft has very strong moat, and Microsoft has very strong balance sheet, which allows them to buy back shares and do dividends. So I believe that out of these 7 companies, the Microsoft has less risks than others. Okay, very nice. Currently we have already moat and risks. Let's move to optionality. Optionality measures the company's ability to create or expand into new markets. The company number 7, Apple. Incremental innovation with limited forays into new markets. This is the problem from Apple I was highlighting on the channel for the long time. Revenue is stagnating. The R&D is one of the lowest for Magnificent 7 stocks. I did not see a lot of innovation from Apple in recent years. The company number 6, Tesla. Exploring energy storage and AI-driven services, but facing execution challenges. I mean, Elon Musk is always promising to do a lot of things. Usually he delivers, but with some delays. Company number 5, Nvidia. Growth potential in AI, data centers, and automotive sectors. I would rank Nvidia a bit higher than place number 5. I believe in a new paradigm of AI. Nvidia will take much more important and significant place in the world. The company number 4, Meta. Focus on metaverse and virtual reality, though profitability remains uncertain. But if Meta actually can execute and develop the glasses which people will use, and these glasses could take some market share from phones, I believe Meta has significant upside from here. And now we are coming to top 3 places in terms of the optionality. Let's see. Company number 3, Alphabet. Ventures into cloud computing, autonomous vehicles, and healthcare. Alphabet has a lot of functionality, very high R&D. Alphabet owns Waymo, which already scaled in multiple cities in United States of America and now making 250,000 rides per week. The company number 2, Microsoft. Investments in AI, gaming, and cloud services offer growth avenues. I agree with that. Microsoft has a lot of optionality. They are presented in best markets you could imagine, and the quality of management is absolutely outstanding. And top 1 place, ready? Amazon, expanding into various sectors including healthcare, logistics, and AI. Amazon is my biggest position, taking north of 26% of my investing portfolio. I absolutely agree with this point. Amazon has a lot of functionality and they did not even start focusing on profitability. Amazing. Currently we have rankings for moat, risks, and optionality. If you are enjoying videos so far, please consider subscribing to the channel. On my channel, I do fundamental analysis, I run public YouTube portfolio, I do educational videos. If any of that interests you, welcome to join. That being said, let's continue with valuation. Analyzes current valuation relative to fundamentals and market expectations. The company number 7, Tesla. Valuation remains high relative to earnings with significant growth expectations. From the historical perspective, we can see that median we have price to earnings 76, almost 77, and currently Tesla is trading double of that, 140. Number 6. Nvidia. High valuation due to AI optimism, but susceptible to market corrections. For Nvidia, I actually 100% disagree. Currently, Nvidia is trading dirt cheap. From the perspective of valuation, we have 10 years PE with a medium of 33.85, and currently Nvidia is trading with 26. So I definitely do not agree that Nvidia, in terms of valuation, is almost the worst company among Max 7s. Company number 5, Microsoft, slightly above historical valuation, justified by consistent performance. Microsoft just few weeks ago was inside the buying zone with median PE of 26, and currently after mind-blowing earnings report, Microsoft is jumping back to PE of 30. Number 4, Apple. Premium valuation reflecting brand strengths, but growth may be priced in. I actually would rank Apple much worse than place number 4. Currently, Apple is higher than historical averages. Meanwhile, the revenue is not really growing and innovations are limited from this company. And now we are coming to top 3 places in the list. Ready? The company number 3 is Meta, reasonably valued with strong earnings growth prospects. I would say Meta is fairly priced here with PE of 23 and a medium of 23. The margins are very high, the growth is still there, and the Zuckerberg is still very motivated executive, founder-led. Top 2 company is Amazon. Valuation has become more attractive after recent pullbacks. I absolutely agree with this point from AI. Amazon currently is trading in terms of the price to operating cash flow of 14 with the average of 18 or even 19. I would say that Amazon is very underpriced here. That's why I was buying aggressively during the recent few weeks. And the top 1 company in the list is, ready? Alphabet, trading at a discount comparing to historical averages, offering potential value. Absolutely true. Currently, forward PE of Google dropped to 16s. These are the lower levels than COVID. Absolutely mind-blowing, dirt cheap valuations. But because of competitive pressures and regulations, investors are not confident to buy Google here. Perfect. Currently, we have 4 out of 5 categories covered. Let's move into returns. Future returns. Estimates expected long-term return potential based on the growth prospects and market positioning. Company number 7, Tesla. High growth potential, but accompanied by substantial risks. It's definitely true. Currently, Elon Musk is explaining how the Tesla will be $30 trillion, $40 trillion company. But actually, if Tesla can scale the FSD and also make the robots firstly for the factories and later for consumers like you and me, I think Tesla definitely has very high upside. But it depends on execution. Company number 6, Apple. Steady returns expected, but limited by market saturation. Currently, Apple is not really innovating too much, the revenue is stagnating, and the shares are holding just because of the buybacks and strong brand. Number 5, Meta. Growth tied to success in new ventures like the metaverse. Absolutely true. Family of apps assets, WhatsApp, Instagram, Facebook are very high quality assets, but we need to make sure Meta will succeed in AI and metaverse. Company number 4, Alphabet. Solid fundamentals with potential in various tech sectors. Google is trying to diversify from search by investing huge amount in cloud and other bets, but currently everything depends on the competition in a search and also what will be decision from government. Will Google will be splitted or not? And now we are coming to top 3 positions in the list. Ready? The company number 3 is Microsoft, consistent performer with opportunities in AI and cloud services. Microsoft is a beast of a company, but everybody knows this is a beast, so Microsoft always trade with a premium valuation. The company number 2 is Amazon, diversified business model with significant room for expansion. As I mentioned, this is a top position for me and I'm very bullish on Amazon. I believe this company will continue to execute, and when they start focusing on the profitability, the free cash flow, dividends and buybacks will be mind-blowing. And the company number 1, ready? Nvidia, strong position in AI and data centers suggests robust growth. Here I would agree, Nvidia is going after the most exciting markets nowadays, AI, robotics, self-driving cars. If they continue to keep competitive position, they will make significant returns from here even after 10xing from the time ChatGPT was released. Very nice, currently we completed all 5 categories, and to calculate the total score we need to sum all the ranks. Here we go, now we have total score and it's time to reveal the winners. The top 1 place is Microsoft, the top 2 Actually, we have two companies, Amazon and Google. They are taking the top 2 with total score of 14. Top 3 is Nvidia, followed by Meta, Apple and Tesla. If you enjoyed the video, please consider subscribing to the channel. I will continue to look for new ideas to make a video for you guys. I appreciate your time watching until the very end of the video. Thank you so much and I will see you in the next one.